Want to learn the essential life and health insurance topics quickly? This slides guide is packed with high-priority points to help you study smarter, not longer. Today we are discussing health insurance policy provisions, focusing on key concepts, mandatory rules, and practical examples. Understanding these provisions is critical for anyone studying health insurance or preparing for exams because policies can be complex, and small details often make a big difference in claims and coverage decisions. Why it matters. Health insurance policies are often complicated, and understanding the provisions is essential for both agents and policyholders. The NAIC Model Law has standardized health insurance contracts across most states, ensuring consistency and fairness. This standardization focuses on mandatory provisions, renewability, and common exclusions. Without these rules, two policies could pay differently for the same medical procedure, causing confusion or disputes. Standard provisions also help insurers manage risk fairly across states. Mandatory policy provisions. The 6 highest priority mandatory provisions begin with the entire contract clause, which means only the policy, the application, and any rider's count. Verbal promises made by an agent have no legal effect. The time limit on certain defenses provision usually allows insurers to contest misstatements for 2 years, such as misstating a pre-existing condition. The grace period gives extra time to pay premiums without losing coverage, 7 days for weekly, 10 for monthly, and 31 for annual payments. Reinstatement allows lapsed policies to be restored. Accidents are covered immediately, but sickness coverage usually resumes after 10 days. Notice and proof of claim require policyholders to notify the insurer within 20 days and submit proof of loss within 90 days. Time and payment of claims ensures the insurer pays claims promptly once proof is received, with disability claims typically paid monthly. These provisions form the foundation of health insurance contracts. Beneficiaries and legal actions. For life insurance, claims are paid to the beneficiary, while other health insurance claims go to the insured. Policyholders cannot sue before 60 days, and any legal action must be filed within 5 years. The policy owner can change the beneficiary at any time unless the designation is irrevocable. For example, a father may initially name the mother as the primary beneficiary and later update it to a child if circumstances change. If no beneficiary is named, the claim is paid to the estate of the insured. Slide 5. Optional provisions. Optional provisions can adjust benefits based on circumstances. The change of occupation provision adjusts the benefit if the insured changes to a riskier or safer job. Misstatement of age allows benefits to be corrected based on the insured's actual age. The other insurance or relation to earnings provision prevents overpayment when multiple policies exist. Cancellation and conformity provisions ensure the policy aligns with state laws and may allow the insurer to cancel with proper notice. For example, if a person has 2 disability policies each paying $2,000 per month but earns only $3,000, the insurer pays proportionally. Common exclusions. Health insurance commonly excludes coverage for war or military service, self-inflicted injuries, felonies, intoxication, narcotics use, cosmetic or experimental surgery, and work-related injuries covered by workers' compensation. Pre-existing conditions are excluded for a limited time under the defense clause. For instance, breaking a leg in a car accident while intoxicated would result in a denied claim. Renewability provisions. Renewability provisions protect the policyholder from cancellation or premium increases. Non-cancelable policies cannot be cancelled, and premiums remain fixed. Guaranteed renewable policies must be renewed as long as premiums are paid, although premiums may increase by class. Cancelable or optionally renewable policies can be terminated under specific conditions. Conditionally renewable policies limit termination to certain circumstances such as age or occupation. Non-renewable policies are short-term and typically last less than 1 year. For example, a disability policy might be non-cancelable with fixed premiums until age 65, whereas a short-term medical plan might be non-renewable after 6 months. Non-cancelable coverage provides the strongest protection against premium increases. Practical example/mini case. Consider John, who misses one monthly premium. Because of the 10-day grace period for monthly payments, his coverage continues. If he files a claim on day 5, the insurer pays the claim but deducts the unpaid premium. If he waits 2 months, he must reinstate the policy before coverage resumes. This scenario highlights the importance of understanding both the grace period and the reinstatement provisions together. Quick memory tips. To remember the most critical rules, use the July 10th, 31 rule for weekly, monthly, and annual grace periods. The time limit of 2 years applies to contesting misstatements. Reinstatement covers accidents immediately and sickness after 10 days. Beneficiary order follows primary, secondary, tertiary, then estate if no beneficiary is named. These memory aids simplify exam preparation and real-world application. Key takeaways. Mandatory provisions form the foundation of any health insurance policy, including the entire contract, time limit, grace period, reinstatement, and claim process. Optional provisions, exclusions, and riders adjust coverage to fit individual circumstances. Renewability provisions protect policyholders from unexpected cancellations or premium hikes. Always read the policy carefully, as legal requirements and claim timelines are strict, and understanding these details ensures proper coverage and smooth claims processing.